Today, New Zealanders, who's directing the Reserve Bank and giving you deposit insurance finally. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. The New Zealand Cabinet has finalised a package of new measures to protect New Zealanders' interests in the banking and financial system, including guaranteeing deposits of up to $100,000 per eligible institution. It was announced today. These measures, the final part of a comprehensive review of the Reserve Bank of New Zealand Act, have been the subject of extensive consultations, they say. They will help protect New Zealand's financial system and wider economy from damage that could be caused by excessive risk-taking by the deposit-taking sector and any resulting failures of institutions, said Grant Robertson. While New Zealand's financial system is sound and well positioned to withstand the stresses posed by COVID-19, these reforms ensure the Reserve Bank is better equipped to protect and promote financial stability in the future. Taken together, the recommendations will considerably strengthen New Zealand's financial system safety net and contribute to a robust framework of protections for depositors. It will also bring our protections in line with those in places overseas, he said. We originally proposed a $50,000 limit for deposit protection, but after listening to feedback, this has been increased to $100,000, and this will fully protect 93% of depositors. When enacted, these measures mean individuals will have up to $100,000 of their deposits in any eligible institution guaranteed in the event of a failure of an institution. As well as instituting the Deposit Guarantee Scheme, the measures they've confirmed today will improve regulation and supervision of deposit takers and strengthen New Zealand's financial crisis framework. Drafting of the legislation will now get underway, with the bill expected to be introduced to Parliament towards the end of the year. The aim is to have deposit insurance up and running in 2023, Grant Robertson said. And the reforms will also include a new process for setting lending restrictions such as loan-to-value ratios. This will give the Minister of Finance a role in determining what types of lending the Reserve Bank is able to directly restrict. The Reserve Bank will then have full discretion to decide which instruments is best suited to use and how the restrictions are applied, Grant Robertson said. As with other prudential requirements, lending standard policies will be subject to more general requirements such as consultation with other government agencies and the public, and the Reserve Bank needing to have regard to the Minister of Finance's financial policy remit. And the Reserve Bank in New Zealand said a cabinet decision to adopt the financial measures resulting from the Reserve Bank Act review will see drafting commence for new legislation to be known as the Deposit Takers Act. The measures announced by Minister of Finance the Honourable Grant Robertson will promote financial stability and protect deposits held in both banks and non-bank institutions. They conclude a comprehensive review of the Reserve Bank of New Zealand Act and build on reforms already confirmed to update the objectives and decision-making processes of the Reserve Bank. The new Deposit Takers Act will create a single regulatory regime for all banks and non-bank deposit takers, such as building societies and finance companies, and it will also introduce a new deposit insurance scheme that will protect up to $100,000 per depositor per institution in the event of a failure. Reserve Bank Governor Adrian Orr said reaching this stage was a significant milestone in strengthening the regulatory framework for all institutions that take deposits, as well as introducing the new deposit insurance scheme. The Reserve Bank is responsible for regulating deposit takers to help ensure their safety and soundness, in line with our mandate to promote the prosperity and well-being of New Zealanders. This new act will broaden and clarify the scope of our role, he said, which has evolved significantly since the Reserve Bank began prudentially regulating banks more than 30 years ago. It also modernises our regulatory processes and instruments. The reform will also provide important new enforcement tools which will help us to manage emerging issues and an enhanced crisis management framework to effectively respond to any failures and minimise the impact of the financial system, the economy and society. I would like to take this opportunity to thank everyone who made submissions during consultation and who have supported us to get to the stage where we can start drafting this important legislation. Secretary of the Treasury, Dr. Carolee McLeish, said the Reserve Bank Act review was a highly successful collaboration. I'm immensely proud of how the review team drove this complex work programme forward, particularly last year during the pandemic responses, when we were undertaking public consultation on the new framework for deposit takers and finalising changes to the Reserve Bank's objectives and decision-making processes through the Reserve Bank of New Zealand Bill. The enduring relationships and collaborative process we developed provide a very strong basis for working together closely in the future on macroeconomic and financial policy. The Reserve Bank's prudential regulation of deposit takers is critical to promoting prosperity and well-being. Financial stability helps protect New Zealanders' savings, reduces the risks of unemployment, and enables confident participation in the financial system. The bank will continue to independently set prudential policy subject to strengthened accountability and transparency requirements and a requirement for it to have regard to the government's financial policy remit. Suzanne Snively has chaired the Independent Advisory Panel for the review of the Reserve Bank since it began in 2017. She acknowledged the hard work and focus of the review team. The team took into consideration the external advice from the panel, and in this way it was possible to collect evidence to test many options. The Reserve Bank will lead the implementation of the new Deposit Takers Act. Deposit insurance is being prioritised ahead of the rest of the Act coming into effect and is expected to be up and running in 2023. The next opportunity for further public input will be an exposure draft of the Act later this year. So there are a couple of observations I want to make. Firstly, now New Zealanders will ultimately get deposit insurance. Of course, how that is precisely structured and who pays for it and on what circumstances it will be activated is all to come. In Australia, we have a scheme which is controlled by the government and managed by APRA. And of course, the deposit insurance doesn't exist until the government says it comes into existence. The broader point about the role of the Reserve Bank in New Zealand is quite interesting because there is now a stronger relationship between the Reserve Bank and government, and specifically the Treasury operations. And whilst the Reserve Bank seems to have some independence with regard to specific decision-making, the overall direction is now much more clearly aligned to government rather than the bank itself. Now, that shift of responsibility seems to me to be materially significant. And this brings to mind my recent discussion with Senator Gerard Rennick, where we specifically discussed the role of the Reserve Bank in Australia. And he was advocating, and I certainly agree with him, for reform of the Reserve Bank, a review of its role and purpose, and very importantly, a question of its accountability. Perhaps New Zealand once again gives us a clue as to what we should be thinking. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.